Hello everyone and welcome to the Dow Jones Dave School of Investing. Today we're going to talk about ex-dividend and what the word means and what is the effect on stocks. Now if you're a dividend investor or if you're not a dividend investor, ex-dividend is something you should know. Now I don't want to get sidetracked on this. We'll just keep it to a lesson. Ex-dividend date means that on a specific date, and this isn't the payout date or the record date, it's the ex-dividend date, which is different than the other two. And we're only concentrating on ex-dividend. Now what happens is, the day the stock trades ex-dividend, whatever dividend is going to be paid out is subtracted from the opening bids. And I'm going to demonstrate that in a minute. You see Arch Rock. I'm not recommending the stock. It's got a decent yield, so you can see the effect of ex-dividend on it. And I am using this stock to demonstrate ex-dividend. So they paid a quarterly. They didn't pay. The stock traded ex-dividend or without this dividend on the 7th of August this year. Everybody got that. The record date for that is the 8th. What that means is that if you own the stock on the 8th, and I'm not sure if you have to hold it throughout the whole day or whether you just own it sometime on the 8th. That I'm not sure of. If you own this on the 8th and it's registered, which means you have to have this effect, you have to register your shares, which, I don't know, 30 years ago it was $25. Who knows what it is now. But you register your shares in your name. That means the dividend, when it's paid out, will be sent to your house by check. Or maybe directly deposited in your bank account nowadays. I don't know. They used to just send you a check. So one thing you can do is sometimes the record date is before the ex-dividend date. So you hold through the record date. If you have registered shares, you go then sell the stock and you avoid ex-dividend. So Dave, you might be asking, what the heck is ex-dividend? Well, I explained it. The stock, whatever the stock is bid at, and the stock we're going to look at, it was bid down a nickel. So it was going to open minus 5 cents. But then it opened minus 20 cents. How do I know that? Because the stock, it's in the market makers, I don't know who exactly does it, but somebody deducts the amount of this dividend from the opening stock price. So I'll give you an example. We have an example. This Arch Rock, we just looked at it, right? So, here's the close on the 4th of August. Then you have the 5th and 6th, Saturday and Sunday. And here's Monday, 8/07, ex-dividend date. Dropped from the close, 12.84 to the open, which you see right up here, by the way, to the open, which is 12.69. How much is that? About 15 cents. And that is ex-dividend. And this lesson is really important, especially if you're going to watch my Dow Jones Industrials composite coverage, because of the way they handle ex-dividend. And I'll explain that in one of my Dow composite things and have a link to this video, so I don't have to explain ex-dividend every single video I make. So in order for you to watch my videos, you have to be educated. So I'm going to have a playlist that's Dow Jones Dave's School of Education. And we rock. So with things like this, ex-dividend. Now the question is, could you trade it? I don't know. Sub to my channel. I'm gonna look into it. This is Dow Jones Dave with your definition of ex-dividend date And remember, this isn't when the dividend is paid. This is simply when it's removed from the stock price. And it will usually be paid a couple weeks later after ex-dividend. And the record date where you can be a registered shareholder and sell your shares the day after the record date, and they'll send you a check, because you don't have to hold the stock here to get the dividend if you register your shares. So anyway, that's a solid explanation and complete, as far as I can tell, of what ex-dividend is. And ex-dividend is this big gap. To put it really simply, ex-dividend means a gap by the amount of the dividend from the normal opening price. Anyway, well, it might not be a gap. If this was all run up, it could have opened down here and it would be in the range. You know what I mean? Well, anyway, that gets into subjects we're not covering here. We just wanted to cover ex-dividend, how you as an investor can register your shares, take care of it, and take advantage of it. Hang on a minute. God, I wish there was a default or something. Okay, so I got rid of all that annoying stuff. And that's ex-dividend. I hope you got something out of this lesson. And this is Dow Jones Dave. Until next time, have a nice day, night, whatever it is. Good day trading if you're trading. Anyway, check out my channel. Check out some of my videos. Sub up if you want to get a real education in stocks.